Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into Artsway Manufacturing's latest quarterly report. And let me tell you, it's a bit like a roller coaster, unexpected dips, surprising climbs, and a few loop-de-loops that might leave you dizzy. Artsway, for those who don't know, is a company that makes farm equipment and modular buildings. Think tractors and specialized animal housing. This report gives us a peek into how they performed over the last 3 months, and like any good story, it has a bit of everything. Let's get started. This report is for the period ending in February. It's basically their report card to the Securities and Exchange Commission, or SEC, and to their investors. It tells everyone how the company is doing. Let's dive into the numbers. The balance sheet gives us a snapshot of what the company owns and owes. We'll go over some key details here. First up, accounts receivable. This is the money owed to Artsway by its customers. In February, it was about $1.4 million. That's down from about $2.4 million at the end of November. This could mean sales slowed down a bit or they got better at collecting payments. Next, we have inventories, which are products ready to be sold, raw materials, and work in progress. The number here is about $10.9 million in November. That tells us the company is producing product but has challenges selling them. Now let's look at the other side of the balance sheet line of credit, about $222 million in February compared to $1.9 million in November. That's the money they borrowed from the bank to fund operation and probably finance that inventory. The income statement shows us the company's profit or loss over the 3 months. Sales were roughly $5.1 million compared to $5.7 million for the same period last year. That's a decrease that is not great. It means a slowdown of purchases for Artsway products. To produce those sales, it cost the company around $3.6 million compared to $4.2 million last year. Lower sales numbers usually correlate with lower production costs. General and administrative expenses, which are like running the company, came in at around $1.20 billion. This is where you pay for accounting, management salaries, all of the office stuff, meaning the company became more efficient in that regard. Interest expense was about $76,000 compared to a much larger $66,000. That sounds like they might have paid off a big chunk of debt. Bottom line, the company had a net loss of around $56,000. A loss is never good. Last year it was a $465,000 loss. This means they narrowed the loss. They are doing better, but still not profitable. The cash flow statement tells us how cash is moving in and out of the company. Cash used in operations, so the day-to-day business, was about $102,000. They had to use cash to keep the operation running and hopefully growing. On investing activities, the company bought around $83,000 of equipment. Then on the financing side, they got about $71,000 from their line of credit. Overall, they ended up with a little over $4,000 in cash. They have been trying to completely shut down their tools segment for a while now, and it finally looks like it as of the end of last year. The company had to recently adopt a few changes to how they report their segment results and disclosures. They had to recast numbers in previous reports in the first fiscal quarter of 2025. Breaking down revenue, the company has 2 main segments: agricultural products and modular buildings. Agricultural products brought in roughly $3 a million from modular buildings. The previous year, $4.2 million came from agricultural products and $1.5 million from modular buildings. The modular buildings revenue increased while the agricultural segment revenue decreased. Accounts receivable is about the money that people owe you, and they created an allowance to cover losses here and there because people will not pay up. It started at around $100 and decreased to roughly $106,000 after credit loss provisions. Not too bad. It is about revenues that are expected plus money that are owed by the customers. As for liabilities, it is roughly the opposite of asset. Now let's talk debt. Artsway has a line of credit with Bank Midwest where they can borrow money up to a certain limit. The maximum borrowing capacity is $5.5 million. The actual borrowing they have is $2,199,437. The interest rate on the term loan is 7%. This is where the report is obligated to tell us about transactions with individuals inside the company. There wasn't any revenues generated from a transaction with a related party. Good to know. For the most part, the fair market value of assets and debts are pretty close to what they report, so nothing really out of the ordinary here. Again, the company has 2 reportable segments. The numbers are very similar to the previous report, so not much new to discuss. Finally, after the period of this report, Artsway renewed their line of credit with Bank Midwest, and the bank also pre-approved a bigger balance for it. Now let's put all this together. Artsway is facing some headwinds. Sales are down, they are still not profitable. However, expenses are also down, which means there is a path to profitability. Their modular building segment is doing well, but their agricultural product segment is struggling. The company needs to balance supporting that business and invest on the modular building business. It's hard to deny the cyclical nature of the market makes Artsway's situation volatile. Their stock is pretty sensitive to this risk and might see ups and downs. We also don't know when the Artsway situation volatile. Their stock is pretty sensitive to this risk and might see ups and downs. We also don't know when the ERC stimulus will come and how that impacts cash flow. To conclude, Artsway is doing okay, not bad, but nothing to celebrate. You might consider them a hold. Thanks for watching Corporate Decoder. Hit like and subscribe for more simplified deep dives into the financial world. Leave a comment too on what company we should analyze next.